People. Quality over quantity, right?
That's right.
All right, I'll send that in the chat. Okay, everybody, thank you for coming out on this super nice hot Wednesday, joining us for this first time homebuyers webinar. My name is Sam Thompson. I work for Joe Bladek. I'm a local local mortgage agent, and we're also joined with Mary Ralston from the Waterloo. She's going to be speaking on the real estate process and yeah, take care of that. So thank you everyone for coming. Thank you everyone who's watching on the Facebook or YouTube live stream. We are just going to mute everybody for the time being. I'm going to start my presentation first, going over the mortgage process. Then Mary's going to take over and look after the real estate process. So if you guys have any questions during the either presentation, just go ahead and write them in the chats. And then we will come around to a Q&A section at the very end, and we'll cover any questions that you guys might have. You'll also see that there's a little link at the bottom for a chance to win your down payment. Click that link to sign up. I'll talk more about it at the end of my presentation, and then we'll chat about it again at the very end. But yeah, for now, I'll just go ahead and get started here. Sharing my screen. All righty. So everyone can see that. That looks good. Okay, so let's get started. So welcome to the first time homebuyers webinar. Oops, I think I double skipped one. So yeah, as I said, we'll be covering the mortgage process, how to get a mortgage, a lot of the common mistakes we see people come into the office with, how to get some money back when you buy, covering grants and rebates, how to find a down payment, and then of course we'll wrap it up with the first time buying incentive. So just about me. So as I said, I work with Joe Bladek, and I'm a mortgage agent with Verico Mega Mortgages. I'm a first-time buying expert, so a lot of you, if you respond to the follow-up, you'll get in touch with me, and we'll start the pre-approval process. Get to know you a bit, and then that's generally when Joe takes over. And then yes, we are licensed with all banks and lenders. So before we get started, just a quick case study testimonial of some folks that were at one of our previous webinars. So just, look at the information, and if it looks familiar, keep a note, everything that happened. So they came to our seminar. They only had $1,400 in their bank, didn't know their credit score, and their household income was around $65,000. So what happened? So just actually months after attending our webinar, they moved into their new home in March 5th of 2019. So yeah, it's just kind of highlighting that this process works, that we can help, regardless of what your scenario is, we can work with you to get your mortgage approved and get you into that first home. So you're probably wondering from this, where do you start? So the first step we can say is that you should just be getting pre-approved. So why would you get pre-approved? It avoids a disappointment, speeds up the process, and could save you thousands. So what it actually does is it gives you an accurate number of what you would qualify for with the respective lender, so that you have an exact number to take to Mary, so that you guys can house shop for a home that's actually in your price range. There's nothing that would suck more than be shopping at for homes either with an agent or by yourself and realize you're $20,000 too short of that house limit. So it lets you know what to expect. It also presents a stronger offer, and the seller will take you more seriously. So it communicates to the seller that you've done your back work. You've already been, chatting about the mortgage process. You're already eligible for X amount of money for your mortgage. So it presents a stronger offer. And a really big benefit, especially now since we've been seeing the interest rates as low as they are, it guarantees your interest rate for 90 to 120 days. So if we do, start to see them rise again, you'll be protected with your lower rate that you've locked in with. So just to look at some of the banks that we work for and lenders, You may recognize your own bank. Some of them you may not recognize. A lot of them, though, we do find they are funded by the big banks. So one that we use quite often is First National, and they're fully funded by TD Canada Trust. So again, there's a varied amount of lenders that we work with. Some, if you would like to stick with your own bank, can do that. If not, we can find what suits you best, regardless of who the lender is. So how do you get pre-approved? So usually it starts with the text. We have a sign up in our presentation here, which will have a link to book an appointment. So what we've been seeing a lot is it starts with a phone call with me, actually. So it's super easy, done completely virtually. We can do it over the phone, via text, via email, FaceTime. It says Skype, but more than likely it'll be Zoom. Everyone seems to be using Zoom these days. But yeah, it can be done completely virtually, and it really doesn't take time. And again, the benefit of working with a broker is we can do it outside of banking business hours. So we take lots of evening appointments as well. And all you need to bring to that is going to be your pay stub and your photo ID. And then after that, once we move forward to submitting your pre-approval, we will need a couple extra documents, but you can easily send that to us via email or fax. But yeah, most of the process is done completely virtually. So why would Canadians use brokers? So the t-shirt example here is just meant to illustrate that we really find you a tailored fit. So finding a t-shirt, especially if you're a tall individual, can be really challenging because it can fit on the shoulders but be too long, and it could fit on the shoulders but then be too tight. So what we really want to present is a mortgage that'll fit you and fit all of your needs. So we give you more access to more products. We protect your credit score with only one credit check. So we can just simply do one hard check, and then with that, we can, that credit check is valid with all of our lenders, so that we can find multiple products to fit what you're looking for just on that simple one hard hit. And we know that buyers have a unique story. So what we're able to do is actually communicate directly to the lender your scenario. So just a testimony from this is further back in, I believe it was February. We did a webinar. It was in person, actually. And one of our follow-up clients, he called us, had a bit of bad credit from about 3 or 4 years ago. So what we were able to do is find out that at that time he was only working seasonally, and since then he had established full permanent staff status. So we were able to communicate that in the submission to the lender, and then what we saw was actually the next day they got fully pre-approved for that mortgage. So why would Canadians use more brokers? Is again, as I was mentioning, there's a varied amount of mortgages we can get you. If you're planning on getting a new build home, if you're planning on flipping, if you have poor or bad credit, no down payment, short term, anything that you're looking for, we'll have the product to fit what you're looking for. Instead of going to a bank and potentially compromising, in some areas to get the mortgages they're offering, we can really give you the mortgage that fits you best, regardless of the lender. There was also a study that was done that stated that brokers on average save their clients $42 per month. So that works out, if you do the math, to about $1.50 every day. So we like to say that if you use a broker, if you use Joe and myself, then we will buy you one Timmy's coffee every weekday of the month, because the prices did go up. It used to be every day of the month, but we've had to cut back a little bit. So now that we've established the difference between brokers, banks, why to use a mortgage broker, we're going to look at some of the mistakes that we see a lot of people come into the office with, and a lot of them they don't even know that they've made. So mistake number one is going to be ignoring your credit score. There's no sense in keeping your head in the sand, not getting yourself educated on what your credit score looks like. So you don't want to get stuck with a bad rate because of poor credit. So the faster that you get an idea of what that is, the faster you can start working to build that credit, and it'll also just give you an idea of where you're at in terms of your savings goals, as well as when you approach us to get a mortgage, you have a bit more of a confident idea of, whether you'll be approved or whether it'll take a little bit of work. So it's actually really easy now to check your credit score. You can do it at Equifax or Credit Karma. Also, a lot of the mobile banking apps now have an option to check your credit score. The one that you do see with them, it will be a soft credit check. So it may be a little bit different than what we get, but it'll at least give you an idea, so you're not fully taken by surprise when we pull that credit. Also, if you have gone through a bankruptcy or consumer proposal, make sure that you follow the 222 rule. So what that rule is banks will typically not lend you a mortgage until you have at least 2 credit cards for 2 years minimum with a $2,000 balance. So if you haven't done this, it's going to be your first step. Again, just reach out to us if this scenario, sounds familiar, something that you're going through as well. And we can, try and find ways to speed up that process and really walk you through the process of how to rebuild that credit so that you can be eligible for a mortgage. So by the chart here, anything that we see that's 630 or above, you're going to be okay. Anything less than that, it's going to need a little bit of work. So again, reaching out to Joe and myself, we can help you, make some steps to increase that score and get qualified. We're just going to do a quick breakdown of what sort of goes into a credit score. So as you can see from the chart, the biggest thing they look at is going to be credit history. So if you have any old credit cards from high school, things that you've had for years, you don't even really use that much, that is going to be a great thing to keep, because the length that you have that credit account is going to reflect in your score. And the minute that you close that account, open a new one, you actually lose all of that credit history. As well as debt owed is another big thing. So sort of a question that we like to pose is it better to have a $900 balance on a $1,000 credit card, or is it better to have a $900 balance on a $10,000 credit card? So of course it may seem easy, but having $900 on a $10,000 credit card is going to be much better, because it shows that you're working within a very small margin of what you have accessible to you. If you have 900 on a $1,000 credit card, your credit score is going to reflect that you've used 90% of your credit amount. So it's a good thing to keep that in check and make sure that you're not over borrowing on those specific credit cards or lines of credit. So not reviewing your options. So as I said, we have lots of access to different rates, lenders, ways to pay, and penalty calculations. So again, when you come to us, come with an open mind that we know we know what we're talking about, and we know a lot of the different lenders and rates. And through just chatting with you and what you're looking for, we can find you something that's going to fit. Don't read one thing on Rate Hub and think this is the way that I have to do the mortgage, because it may not work out with your specific scenario. So again, in the study that we did previously, is there a difference between 2.84 and 2.99? So the answer is a big yes, actually. So it may seem like a little, but actually over the life of your mortgage, it could save you, up to $10,000 just getting, a slightly lower rate. Again, we're seeing rates quite a bit lower than 2.88. It was a bit of an older slide. But yeah, getting a competitive edge on getting the best and lowest rate is always going to be a best thing moving forward. So different banks. So as I was saying, there's 1,000 different mortgage options available. So running your specific scenario by each bank can result in significant savings. So again, we can check all those products with just one single check, and really find the one that works best for you. Payment options, biweekly versus monthly. The traditional monthly model doesn't really make sense. You end up spending more, and the life of your mortgage is actually longer because you spend more on interest. So switching to something as easy as a biweekly payment just increases the payment frequency, lowering the interest that you're paying over the life of your mortgage. And penalty calculations. So we all know life happens. Sometimes there's no other options than to break your mortgage. Say, you have to move for work, you go through a divorce, something. We want to make sure that you're also covered, that in breaking your mortgage, you won't have an astronomical penalty that is going to leave you in, lots of debt. So we factor that into our recommendation and into when we get you applied for a mortgage, so that you don't get stuck with, say, a penalty with TD at $18,000. So again, these are all little things that we can help you navigate. Mistake number 3 is borrowing too much. So you don't want to borrow more than you need and then end up house poor. We want you to, be able to extend your Netflix subscription, to keep ordering out every weekend with DoorDash, whatever your niche is. We want you to be able to enjoy the house that you buy. We don't want you sleeping with your mattress on the floor. So that's a big thing to look out for as well. And borrowing before you buy. So again, if you are planning on getting a car loan, please wait until you get your mortgage. That way, we've seen that car loans of, even $300 to $400 payments a month can drastically affect the maximum mortgage you can afford. And if you do have a car loan already, don't stress, don't worry. We can walk you through the process and make sure you get your mortgage. So mistake number 4 is just forgetting about closing costs. So typically in person, we'll have a closing cost worksheet. It's laminated, nice little booklet. As we're not doing them in person, we do have an online link that we will send all of you to your emails after this presentation, just covering those costs. And mistake number 5 is just not getting pre-approved. It's super simple, doesn't cost you anything. It can help you win an offer. It really only takes 30 minutes maximum. So yeah, just reach out to us and we can start the process, even to see what you would maybe qualify for. And then that takes you, once you've completed that process, is set up your home buying team. So again, really, we really want to emphasize how important it is to set yourself up with buying agents, such as myself, Joe, and Mary. Relying on a seller's agent, they're not going to have your best interest as their top priority as they're selling for somebody else. So again, we're all completely free to work with, and we can really get you the best step. We can help you make the best step, into getting your home. So case study number 2. How am I doing for time? Okay, so this home was valued at $329,000 when they bought it. The down payment was only $16,000, and their biweekly mortgage payments were $696. So what happened here? So after 5 years, the market value of the house went up to $419,000. They had $339,000 mortgage left, so they could sell and take $140,000 in equity to the next home just in 5 years. So this is just a testimony that there's really not an investment quite like real estate. We see, time and time again, the increase in equity. It really gives you the most bang for your buck. Plus, you can live in your investment while it's gaining that appreciation. So without further ado, we're going to get to the best part: how to save some money, how to get some cash back in your pocket with credits, rebates, refunds, different ways to get that mortgage. So the first one I'm going to chat about is going to be the first time buyer incentive of an energy efficient home. So you're entitled to a refund of approximately $1,000 if you purchase a home that is currently classified as energy efficient. If you buy a resale home that is not, and you increase the efficiency by, I believe it's about 5%, you can be eligible to a refund as well. So say you purchased a $425,000 home with 5% down, that would be a refund of about $1,100. A big one, only if you're a first-time buyer, is going to be the land transfer tax rebate. So if you're purchasing in Ontario, that refund is going to be approximately $4,000. And what they'll do if you're buying in the GTA, like in Toronto, they'll actually kick in an extra $3,700. So in total, you could save $7,700, but assuming you're just buying in Ontario, they'll cover the refund of about $4,000 to cover that land transfer tax. So again, using our previous example of $425, if you were to qualify for one in Toronto, that would be a refund of $7,700. So the new to Canada benefit. So this is a cool system. If you are new to Canada, you are a permanent resident within the last 5 years, what they've done to make it a bit easier to get over some of those hurdles to, getting that first step into your new home is they've actually reduced the employment requirements to just 3 months, and they removed the need for a credit score. So what they'll do instead is look at bank statements for, say, the last year, insurance statements, phone bills, and calculate it based on those. So there's also an HST rebate. So this is for anyone who's looking at building their own home or buying a new home from a builder. You are eligible to qualify for this HST rebate on the purchase of that home. So if you were to buy a new build that costs $425,000, that rebate could work out to about $33,000. So it's a great option if you were already considering buying a new home or were interested in building your own home. Tax credit available to first-time home buyers. So this is something that you'll file on your income tax of up to $5,000. So it's, forget the line number, but it is on your income tax return. You just fill it out to 5,000, and then you'll get that tax credit. So on a family that has a household income of 85,000, that can work out to about $2,100 back into your pocket. So free 1-year home warranties. So some of our lenders, they actually offer the first year of owning your home a free warranty, which covers, home heating, air conditioning, electrical, water heating, and plumbing. So again, Murphy's Law, if something's going to go wrong in your home, probably is going to be in the first year of owning that house. So again, reach out to us and we can point you at the lenders that have that 1-year warranty. So it covers up to $10,000, and there's no inspection required on those repairs. Oops. So something else that they've done, that they've added, if you're having trouble getting your down payment, is you can actually withdraw from your RRSP completely tax-free. So they've increased it from $25,000 to $35,000 that each home buyer can withdraw. And that's about, I think it's, $70,000 now per couple, fully tax-free from your RRSP. If only one of you is a first-time home buyer, they will reduce that to 50%. So again, it's a good thing to keep in mind, but it can save you an additional $21,000 just in tax using this benefit. So for that, you again just need to be a first-time home buyer, either a person with a disability or buying a home for someone with a disability. And it's really calculated by if you've not owned any properties in the last 4 full calendar years, you'll qualify. So how to get a down payment even if you don't already have one. So time and time again, we see, couples, individuals come into our office with great credit score. They have great job, great income, but they just don't have the savings to get them into their home. So what is in place in a lot of these municipalities, including Waterloo, which extends, to Kitchener, the surrounding area, not just Waterloo. But there is actually a municipal grant available. So it works in that it gives you, I believe the Waterloo one is 5%. Some of them range 5 to 10% in a shared equity loan that's completely forgivable. So they will help increase your down payment. And if you live in the home for longer than 20 years, it's completely forgivable. You don't owe them anything back. So that's a great option to look into if you're looking to boost that down payment. Other ways of getting a down payment, is either accessing a line of credit. There are some rent-to-own programs available. Some cashback mortgages can help keep you afloat so that you get some money upfront. And of course, gifted money from family always works. So in total, just tallying up some of the things that we've been able to save you. If you were to qualify for all of them, that's about $52,000 in savings. And I don't expect you to remember all of that. I went through them, super quickly, but the benefit is that we know them and we will know, what ones you'll qualify for. We will 100% suggest certain ones if it fits your scenario of what you're eligible for and fits your vision of what you're looking for, to really, walk you through the process of applying for them, for qualifying for them, to get you the maximum savings when you get into your new home. So now, as I said, we're going to finish off on the first-time home buying incentive. So get ready for this. So again, it is a government-funded shared equity loan. So it enables first-time home buyers to reduce their monthly mortgage payments without increasing their down payment. So is not interest-bearing and doesn't require ongoing payments. So it's actually classified as a second mortgage on your home. So if it is a resale home, the government will kick in an extra 5%. If it is a new construction home, you can choose either 5% or 10% added to your down payment. So just looking at some comparison here of somebody who used the first time home buying incentive versus someone who didn't. So all the factors are the same in the sense of the buyer's income, the home price, and the down payment. As we can see, the one on the right has an additional 5% down, bringing the total to $42,000 down. So what that did is it actually lowered the mortgage insurance premium by close to $5,000. And because of that, the difference in their monthly mortgage payment was $123. So what that can save you each year in your mortgage is $1,400. So what properties are eligible for this incentive? So any new construction, resale homes, single family homes, semi-detached, duplex, triplex, fourplex. Basically, if Mary can find it for you, it'll be eligible for this incentive. So who can apply? So any Canadian citizens, any permanent residents, non-permanent residents who are eligible, who are legally authorized to work in Canada will all qualify. A couple stipulants on it is the borrowers must have a maximum qualifying household income of $120,000. And what they'll actually do is limit the borrowing amount to 4 times whatever your household income is. So at least one one borrower must be a first-time home buyer as well. And yeah, again, just to cover the final base of it, so it's a 5% shared equity loan that sits with you for the life of the mortgage. So at any point that you break your mortgage or move to a new home, anything like that, or at the end of your mortgage, you will be obligated to pay that 5% back off of the sale value. So it is a shared equity loan. So if the house, the house at selling increases its property value, they will share in the gain. And if it loses value, then they will share in the loss as well. But again, it'll save you quite a bit over the life of your mortgage in lowering what your monthly mortgage payments are. So that is the end of my presentation. So again, I will plug our sign up one more time. So it's in the chat box. I can add it again. As a thank you, we want to send you guys all a scratch ticket to give you a chance to win your down payment. It's a really quick, simple form. All the prizes are up to $10,000. Even if it's half that and you win 5,000, it's worth it just to fill out, get the card. And yeah, it's really just a thank you for coming out and spending your lovely, super hot Wednesday with us. So again, just remember to get pre-approved. The numbers on the screen there are how you can call and text us. You can visit us at Mortgage Web, Barrie Mortgage Broker. And again, we'll add a link in a follow-up email that will give you a calendar booking app so that you can book a call back with us today. So thank you. That is the end of my presentation. I will exit out and stop sharing. Hope that made sense for everyone. If there's any spots you're still fuzzy with or have more questions, feel free to just add them in the chat box now, and then we'll round off with some questions and answer after Mary's presentation. So Mary, I guess it's over to you.
Okay, that was great information, Sam. Let me just bring up my screen. 1 second. Okay. Okay, so I'm going to take you through what it's like to buy a home. Buying a home is one of the most expensive things that you're ever going to do in your life. So when you're buying a home, you need someone who's there for you and who's going to guide you and to help you make the right decision. So I'm going to take you through the things that I do with my clients when they're looking for a home. So this is your complete home buying experience. So some tips that you need to know before you buy. You need to work with a lender for a pre-approval. So like Sam and Joe will help you with your pre-approval. That is the most important step before we even go out to look for a house. Especially in the market that we're in right now, it's very, very competitive. And if you're not prepared, you're going to have a lot of disappointments. Because when it comes time to do an offer on the house that you really like, and then you find out that you can't get it because someone else put an offer in and they didn't have conditions and your financing wasn't done, then it's very disappointing for everyone. So pre-approval is very, very important. So things that you're going to have to count on when you're buying a home, you're going to have a down payment. So, there are incentives that Sam and Joe can help you with your down payment options. And you're going to want to have a home inspection or a pre-inspection. So what a home inspection is it's an inspector who's hired to go through the house, and they just take you through all the details that you need to know on buying your home. And it's a guide that helps you get to know the house that you're buying. A pre-inspection is something that we do before you're buying the house to put an offer in. So that's the main difference between a home inspection and a pre-inspection. So sometimes, because of the way the market is with being in competing offers, so competing offers, that just means that there's more than one offer on the house that you want to buy. So sometimes what we do, instead of doing a home inspection condition, is we do a pre-inspection while we're going through the house. So that takes care of that. And you're going to want to set up a purchase budget to make sure that you have all the money that you need for closing costs. Because when I bought my first house, I wasn't told about all the money that I needed to buy a house. And when it came time to sign all the papers at the lawyer's office, you're going to get what they call a closing cost statement from the lawyer. And I had a bit of a surprise. So I don't want you to have any surprises at the end, because that is not fun. And never deal with the listing agent. A lot of people think that they're going to get a better deal if they go through the listing agent. That's just not the case. Their contract has already been decided on with their client, and they're looking after their client's best interests, just as I'm looking after my client's best interests when they're buying a house through me. So that's something important to remember. So the expenses that you're going to have a deposit, the home inspection, which, we talk about that at the time. You're going to have some legal fees because you need a lawyer to do the closing. And you may have to pay some land transfer tax. As a first-time home buyer, you're going to get some credits for that. So those are your tips that you need to know before you buy. So now we're going to go through the fun stuff. So the pre-approval process, like I said before, is really, really important. So what I do, once you decide that you want to work with me to buy a house, I'll put you in touch with Sam and Joe, who you know, so you can already get in touch with them, which is great. And then they go through the pre-approval process with you. Once we find out what you're pre-approved for, then I set up a search for you, and we get together and we talk about the type of house that you want to buy, how much you can spend. And sorry, I just got a message on here. Let me go back there. Sorry about that. So we just go through and we talk about, what type of house you want to buy. We're going to get together and either have a face-to-face meeting if we can these days. Most likely It's going to be by Zoom. And then I set you up on a search. So the search is, I think it's fun. Some people don't think it's as fun as it can be. When you first start searching for a home, you're going to get a lot of emails. So what I help you do is I filter through those emails so we can find the right house for you, and I can narrow down your search criteria. So we're going to keep in touch a lot. I'm going to check in with you every week to see how your home search is going. You know, we're going to talk more about what you're looking for. We're going to narrow things down on the search before we go out to look at houses. So once you find a house that you want to have a look at, that's when the fun part comes in. And things are a little bit different right now. So I'm going to cover that later on. So overall, through this whole process, we're gonna talk a lot, and I'm going to help you find the house that you want. Okay, so things are different right now because of COVID-19. So in the past, what we could do was, you know, you could go out to open houses and look at houses. Now you can't do that because even though real estate is an essential service, we cannot do open houses because we can't have crowds in houses. But we can do virtual open houses. So instead of going into a house, you can look at a virtual open house. For showings, in the past, we could book a bunch of showings. We could look at a bunch of houses, narrow things down that way. So now what we're doing instead, because of COVID, is we're looking at houses through video tours. And once we have things narrowed down, then we can go inside and look at a house. So in order for us to go inside to look at a house, you have to be with a realtor. We have to have approval from the owners to go inside. We're going to go in with gloves and masks. Now, if you feel comfortable without having a mask, as long as the seller is okay with it, we don't have to wear a mask. But most of the time, we're going to have gloves and masks. And then I have to go through and sanitize everything before we leave. So that's basically how we look at a house right now. We also have to go through a pre-screening questionnaire. That's done for all of my clients. It's something that my office requires. And all it is it's just a questionnaire that we go through saying that you're not sick, you don't have any of the symptoms, and then we can go in and look at a house. So after we look at houses, so let's say we found the house that you want. So now the next fun part comes in. So this is where it gets a little bit stressful. So now we're going to do an offer on that house. So this is where I come in a lot more, and I put in conditions in the offer that will help protect you, like financing, a home inspection. And those things are based on, you know, what's happening with the house that we're putting an offer in on. I can tell you right now, because everything is very competitive, sometimes you may have a disappointment where, you know, there's going to be a lot of other people putting offers in on the same house. But that's where I am here to help you. And I know how to get an offer accepted, and I know what things I need to put in the offer to get it accepted for you. So I don't want you to stress about hearing about competing offers or anything like that. So it's all good. So I work with you step by step through the whole process. And once we have the offer accepted, then the next step comes in. So our offer is accepted. So now we have to find a lawyer to do the closing for you. And so what I do is I send all the paperwork into the lenders. So like Joe and Sam, I'll send the paperwork to them so they can finalize your financing for you. And I send the paperwork to the lawyer so they can do the closing for you. So once everything is all done, all the conditions are removed in the offer, the house is yours and you just wait to move. And anything that you need in between. So like, let's say you bought a house that was a fixer-upper and you're looking for someone who can do certain repairs in the house or renovations. I have contacts that I can refer you to for that. So my clients, I don't leave after you buy a house. After you buy a house, I keep in touch with you. And so I have what I call my client appreciation VIP program. And so the way I work is I service you before, during, and after closing. So I'm not just going to disappear. We're going to keep in touch if you want me to. Some people don't want to hear from me and they just want to go on with their life, and that's fine. But what I do is I have newsletters that I send out, and they're things that are informative for things that you need to know about your house. So if you want to do renovations down the road, then you might get a newsletter about renovations. Any contacts that you need for anything to do with your house, I can send that to you. So I'm here for you before, after, and during, anything that you need. So this is the second fun part. So I have another draw where you can win something. So the way you're going to win, so definitely go on the link that Sam and Joe have for you, so you can win your scratch ticket and win your down payment. But I have 2 door prizes that I'm going to give out. And I also have some extra scratch tickets that I need to give away. So what I need you to do is either go on my Facebook page and like, share, and comment so I know who you are, and I'll send you something. The other way you can win is if you send me an email. So my email is mary.ralston@remax.net, and send me your contact information. Let me know if you need a pre-approval, and let me know if you would like me to help you find a home, and let me know if you want to join my VIP client appreciation program. Because even if you're not going to buy a house now, we can keep in touch with each other, and you can win something in the meantime. So why not? It's free. So that's the end of my presentation, and we're here to answer any questions that you might have.
Awesome. Thank you, Mary. That was great. Be sure to send her that email or get on Mary's Facebook page to get that door prize, and don't forget to fill out ours as well. You might be able to win both, and then that'd be quite a down payment that you could win through both of us. So we've reached the end of our presentation. So if you guys had any questions for either Mary or myself, feel free to either unmute yourself and go ahead and ask, or type it in the chat box, and we can get answering some of those questions. We'll be here for a bit. Okay. So no questions yet. But yeah, just Mary, something that I've been asked a few times by people is there a good time for you to buy a home, like a good time in the year if you're searching? When should we contact you to get that house?
Well, any time is a good time to buy. Um, I know, standard answer.
Yeah.
Now is definitely a good time to buy, because a lot of people are not coming out. So, instead of, we talked about this at our office meeting this morning, actually. So what I'm hearing from a lot of agents in my office is, before COVID, um, they were getting 10 or 20 offers on a house, whereas now they're only getting 4 to 10 offers on a house.
Wow.
So it's a little less stressful that way. Um, like I said, this area is very competitive. So you kind of have to expect that you're going to be in competition.
Yeah. That's awesome though. Wow. That's half the offers on most of these houses. That's great.
I know, it's crazy.
Mm. And have you noticed people are more or less willing to sell because of COVID, or has it stayed moderately the same?
Um, there aren't as many listings right now, which is, it's partially why things were competitive before.
Mm.
Listings have slowed down, but over the last couple of weeks, we're getting more listings again. So there's more homes coming up that you can choose from.
Mm. That's awesome. Okay. Still no questions at the moment. Come on, you guys must have some. Oh, yes, we have one.
Hey, we have a question.
Okay, so me and my husband both are working professionals, and we are on our work permit right now, and our PR is on process. Would you recommend to get the pre-approval before PR or after getting PR? Would there be any difference in the interest rate? Yeah, so as we've been saying, it's the proactive approach is always going to be best. So we can definitely at least start working you into a pre-qualification to get an idea of what you would qualify for. We would probably want to get your PR like in and have that already in your hands, already be a permanent resident before submitting for the pre-approval. But it's definitely a great time to get in touch with us and get the process started, because the only thing you're going to gain is information on what you would qualify for and where you're at with your finances. And then when you get your PR, we'll be fully ready to submit that. Will there be any difference in interest rate? So being a permanent resident or not wouldn't necessarily affect your interest rate. Again, the timing of when, the timing of when you get it, if the interest rates rise by then, it may be a bit more. So again, just reach out to us and we can get the process at least started. And then if it's in your best interest to get that submission in and lock in a lower rate, then yeah, we can do that for you for sure. It's a great question.
Any more questions?
Okay, so I got one privately from Aaron. So I am looking to buy a house in 1 to 2 years. When would it make sense to get a pre-approval? So again, as I was just saying, it's never a bad time to at least get pre-qualified. So again, through reaching out to our office and getting in touch with myself or Joe, we can give you an idea of what you would qualify for, because they do last for 4 months or 120 days. If it goes any longer than that, we can get it extended, but we will do another credit check. So maybe a good place to start would be, if you reach out, we can book an appointment to get an idea of where you're at financially, and then from there we can work towards maybe touching base 4 months out from when you're more comfortable, and we can just set up communication that way to get you an idea of what you qualify for without it being trying to get pre-approved 2 years before you're looking to buy. Another good question, Aaron. Okay, so I have another question here from Huai Mate 2. So our family income is only 40K. We will be approved for mortgage. As you said, you get grants for down payment when you come under low income. So is there any limit of home price to get approved for such grants? Yeah, so sorry, I'm just rereading the question to get an idea. Yeah, so it might be challenging to get fully approved with that being, you know, your full household income. Yeah, so there is a couple incentives that I chatted about that will help you increase your down payment. Those do so for the first-time buyers incentive. It is maxed at 4 times whatever your household income is as the mortgage rate. And I believe the one for Waterloo, I believe it's set at around 400,000, 380 to 400,000. Don't quote me on that. I have to double check the specific site because all the municipal grants work a little bit differently. But it will have a limit as well. It's not the same that it's locked at 4 times your income. They generally have, you know, a set amount that you can't exceed in purchasing that home. But yeah, if you reach out to us, we can get an idea for what you qualify for. If we can get you in a mortgage with that as your household income, because again, we've seen rates dropping like crazy, and even the qualifying rate used to be at 5.04%, and now the qualifying rate has dropped to 4.49 or 4.94. So anyways, there's a couple things that have happened that do make it a little bit softer to get approved. It's a little case sensitive, so we'd have to, you know, adjust whether you'd be approved based on your specifics. But yeah, if you reach out to us, we can start the process. Good question. Okay. Looks like we're slowing down with questions. Okay, so I have another question here from Aaron. So in a few months' time, I am looking to get financing on a car, which I currently need to make movement easier for my family and I. You made mention of not getting a car loan before the mortgage. So this new information got me wondering when to go ahead with getting this car. Yeah, that's a great question. So again, as we were saying, even, you know, payments as low as 400 a month can pretty seriously hurt what you would qualify for. So I guess depending on the length of time you'd be making those payments, like if you were saying 1 to 2 years, if you were to be, you know, on a loan payment system that would be less than 2 years, then, you know, go ahead. Yeah, I mean, depending on, there's a lot of components into getting pre-approved, even with a car loan, because some people, they make enough in a year to offset those, you know, $400, $300 payments a month, that it still puts them within a range that they're comfortable with and that they're happy with in getting a home. So it does work case to case of, you know, sort of what your income is, any kind of savings. So yes, if you're planning on buying within a short term, then it wouldn't necessarily be in your best interest to get the maximum you would qualify for to get a car loan now. But again, if it's something which you can't wait, or you know, maybe you're looking to actually make the purchase and make the mortgage application after the car loan payments are finished, go for it. Or again, depending on your scenario, we've seen people still get mortgages that they're very happy with making car loan payments as well. So it's a little case to case, but yeah, we can work with you to figure out what your best step would be. So it's a good question. Okay, another one here from Ashna Miriam's iPhone. So if we are planning to bring money from back home for a down payment, how does that work? So that's actually a really good question. So in order for money in your account to be used for your down payment, it does have to be in your account for at least 3 months. It is also kind of case to case depending on what country it's coming from. Sometimes if the government sees that, they will make your, like some countries, they have sanctioned, I think, or maybe that's for work. Yeah. Yeah, so there shouldn't be an issue with that. Again, it does have to be in your account 3 months prior to, applying for the mortgage. Hawaii Mate 20 Pro says, can you please share some more details about the new to Canada incentives as we are in Canada from last 1.5 year only? Okay, yeah. So again, the new to Canada system works if you are a permanent resident within the last 5 years to Canada. So what that does is it gives you sort of softer qualifying requirements to get a mortgage. So if you are a full Canadian citizen, you need at least 2 years work history, as well as 3 years of like resident history of where you've lived previously. So what they've done for that is they've decreased your employment to only having to be a minimum of 3 months. And then because it can be tough, to build your credit from nothing, they've also made it that you can apply and get your credit approved based on just phone bill payments, insurance payments, car payments, any of that kind of stuff. So because you've only been in Canada for 1.5 years, you should definitely qualify for some of those softer restrictions with the new to Canada incentive. But yeah, that's a really good question. It's a cool system to take advantage of to help you get into the home, as it would be pretty difficult to have 2 years work history if you've only been in Canada for 1 year. Yeah, okay. I think that.
Oh, here's one. My wife is PR and is studying, and I am on work permit and working as owner operator and trucking for 1 month. Can I get pre-approved?
Okay, so your wife is PR and studying, and you're on a work permit and working as an owner operator and trucking from 1 month. Can I get pre-approved? So there would be a couple different factors in getting pre-approved. It may be difficult because your work history would only be as 1 month. That might make it difficult, as well as your wife being a student. There's a lot of factors of, is she still, working part-time to provide some sort of income. Yeah, so there's a lot of different factors of what your household income looks like, what your current credit status looks like, any sort of cards and all that stuff. So that would be a very case-specific pre-approval. It might be difficult because of your work history only being 1 month, but again, as I was saying, there's a lot of factors that contribute to actually getting pre-approved. So we'd probably have to chat a bit more to get some more of the specifics of what your scenario actually looks like to get pre-approved. Okay, great questions there. They're flowing in now. Just took everyone time to type them out. Okay, so I have another question from Ron. So I'd appreciate if you can email these information me and Mary discussed. I want to share and discuss with your husband who's at work right now. If any questions, would be in touch for sure. Yeah, so as I was saying earlier, we're going to be sending out a follow-up email with some links to some of the stuff we talked about, as well as a form to book an appointment with myself or Joe as well when you're signing up for the scratch card ticket. Thank you. There's also a section to highlight if you would like to get in contact with Mary, Joe, or myself. So a double incentive to fill out that account is, it also gives an option for you to tick off if you would like Mary to reach out to you, as well as myself or Joe. But yeah, please get in touch with us after this. If you can't think of any questions at the moment, don't stress. We will reach out and get in touch with you that way. Okay, so I do have a question here, but it seems like it is a question from Mary, so I will pass it to you. So it is from Hawaii Mate 20 Pro, and it is, some of my friends said that model homes are low at cost. Is it advisable to buy a model home, and how to search for model homes?
Well, if you're talking about a model home as in a brand new home with a builder, typically those are higher priced and your money is tied up for a long time because you're buying into a house that isn't built yet. So you're going to have a structured down payment system with them. Usually it's broken up into 3 separate payments. And I've seen houses from builders where it takes them 2 or 3 years before it's built. So I wouldn't say that it's less expensive to buy it, because usually what they have to do is they need to project how much the home is going to be worth in 3 years. So it's usually a higher price, but you're waiting for a long time. Plus you're going to pay HST on that. Just so you know. If you buy an existing home, then you don't pay HST. If that didn't answer your question, let me know.
Okay. We'll give a little bit more time to see if anyone has any final questions. Not, we may just end it there and keep in touch with you guys. Look out for our email and sign up for our scratch ticket, thank you card, as well as get on Mary's Facebook page and win that door prize. But yeah, okay, so it seems like the questions have stopped currently. So again, thank you guys for coming out to watch this, and on Facebook and YouTube if you're watching on that as well. Thanks for coming out. We hope you got lots of information and are now, one step closer to getting your first home, or a second home if it's not your first. But hopefully this was informative for everybody. And thank you, Mary, for joining us and giving us some insight on the real estate side of buying your home. And yeah.
My pleasure. I hope everyone got the information that they were looking for, and don't be afraid to email us for any questions that you didn't get answered here.
All righty. Well, thanks, guys. I guess we'll end the meeting now, and
thanks everyone.
Stay safe. Have a great day.
You too.